I'm going to start a little bit. My name is Neil, obviously, and I'm going to work through a little bit of our integrated financial planning application that we talked about earlier in the keynote. And then I'm going to bring Ross back up for a longer session on his journey with Anaplan consolidations. Hopefully, you'll all be hollering and cheering and all that kind of good stuff at the end of this. So excited about what we've been up to. So that's our agenda. That's what we're going to run through. I'm also going to tell you where to see more. So that should be exciting. So let's talk about finance applications. We mentioned this earlier. What we are doing there is literally working with customers that we've known and loved for many years and bringing all of their best practices, all of their approaches, combining and comparing to build our planning applications. I will ask for volunteers because we are still early on this journey. So we've built our integrated financial statements, pretty solid foundational application. Mentioned earlier, revenue through the margin, operating expenses, CapEx, a little bit of projects in there, but very much a very solid starting point, not 90% ready. Say 70, maybe 60% ready. And then you take the engine that you know so well, the modeling power, the scalability, and then you extend out. And that application that we provide you will continue to update as we improve it and take feedback. But where we're looking for volunteers is if you feel like you have a process that should be applicationized, we'd love to work with you as design customers. So I mentioned our roadmap a little bit earlier, subscriptions, we're talking about that. On the workforce side, contact center, we have design customers already very engaged with us saying, this is how we do it. How do we make this better? How do we make this more scalable? It's also a nice way of moving along the technology that you might have if you're on a classic engine and you're considering moving to Polaris, because everything we're building is on the Polaris engine. So it's all the latest, greatest software. And we mentioned CoPlanner starting to be integrated out of the box as well. So our complete vision, as I mentioned, is I want to be able to stand in front of a CFO and say, the second you close your books, you move into Anaplan world, and from there, all planning across the organization should be in our one platform. You do that for SAP for your actuals, pretty much. Why can't you do that for all planning activities with something like Anaplan? So that's what we're aiming for. How we are delivering that, whoops, excuse me, I pressed the button twice. How we are delivering that is, again, maintaining and improving and keep working on and polishing the existing modeling engine. We will never, ever, ever lose the ability to build a model from scratch. If you never, ever want to use an Anaplan application, that's perfectly fine. Just use the engine that you know and love. So that is the foundation of everything. The scalability that we also know and love that's market leading. Nobody can get bigger, longer, faster, broader than Anaplan from a scalability perspective. Everything we're doing is leveraging that engine. And again, we make it bigger, faster, stronger as we progress. You can just be a consolidation customer. Ross will talk a little bit about what he uses for planning. For some reason, he doesn't use Anaplan. It's perfect. Very strange, but we will talk about why that might be. So you can start in one place. You can start with consolidations. You can start with a planning area and expand as and when you're ready. We are seeing a big trend in vendor consolidation. Obviously, it's more cost effective, train people on one platform, work with one vendor, maybe one partner, much, much easier. So we like that actuals to plan vision. Adam talked a little bit about the $500 million investment. That's probably more than maybe 5 to 10 of our competitors' revenue combined. So only Anaplan really has the scale and ability to now invest. And you're seeing that, particularly in the AI area, start to come to fruition. From a enterprise power and trusted partner perspective, yes, we want to be across your enterprise, but of course we need to be trusted. So part of the benefit of having lots of cash in the bank and investing is making sure that we're very secure, making sure we're keeping your data isolated, making sure that you can trust us with the vital information that you need. So those core tenets are applied to our finance area, but also supply chain, performance management, and workforce. So super exciting vision. I love the idea of satisfying everybody in finance. So I spent 10 years as a CFO finance person and always was looking for a single solution and a single platform. Never really found one. As I mentioned, I've been in the space forever. So it was always planning. Oh, that consolidation thing's really strange, and vice versa if I was on the other side of the house. So bringing all this together is one of those unfulfilled missions of this industry, and Anaplan's very well placed to do that. What we also like is, again, back to the modeling engine at its core. So if I did use integrated financial planning, and we've seen this across existing customers who've been implementing, I'm thinking of rolling out into a new division. I'm thinking of replacing my old stale model because things have moved on. We built it 10 years ago. It's time to upgrade. We've seen customers come to us and say, can I use IFP as my starting point? And of course, the answer is yes. So Dan mentioned this stat. It's quite fascinating. About half of our application sales are to net new customers, and about half are to existing customers who are at that point in their journey, again, with an expansion opportunity, or just replace something that's got old and stale. Maybe the staff have turned over and it's time to refresh. So we don't mind if you're in the functional unit, if you're a business unit, if you're sitting at corporate from an FP&A perspective, we've always got places to start. Our 3 core applications, we are bringing those together really, really nicely now. So we're on that journey. Actually, we're not demoing that today, are we? We're demoing something else today. But if you'd like to see a demo of how we move that data around, please let me know. We are performing that now with customers saying, hey, this is how you move the data. So if you are a consolidations customer and a planning customer, and you change something over here, maybe you add a new entity, maybe you post some journals post-consolidation, and you want to flow that into your planning side of the house and see that reconciled for you and the metadata updated, we'll show you how to do that. If you aren't sitting in consolidations and you need to pull across the formal budget or the formal forecast last approved, we'll show you how to do that as well. And layering on top of that, and if you haven't touched our Anaplan Excel or Anaplan for Office narrative reporting through Word, PowerPoint, and obviously Excel itself, it is a fantastic solution. Just give it a try, because it's absolutely fantastic, super flexible, super easy, particularly for users who may be occasional users just to consume information or put information into the system. Obviously, it's bi-directional. But all my report books, my budget books, my PowerPoints for the boss, etc., you can now automate all of that using our disclosure management narrative reporting solution, which we are putting on top of both of our core finance applications, of course. So that's what we're up to. I'll briefly mention Workforce. So we have a separate track for Workforce. I obviously look after Workforce. It's close to my heart. We are now beginning to integrate workforce planning into our headcount budgeting process as well. So during the course of this year, if I'm doing my position planning, I'm working with my HR team, they're starting to plan capacity, etc., that should automatically flow into a version, a forecast within my financial planning system in the Office of Finance. And so that integration work is being done right now, so that if you are a joint customer, and we have a bunch of those, you will no longer have to do that plumbing manually. We will putting that within the system itself and out of the box. And again, we're extending into those other areas. So working with supply chain, the finance view of supply chain planning, working with sales and GTM planning. So when my total quota is done, my territory quota is done, I can now pull across the financial plan of these are the heads that I might need. This is where we're investing, etc., etc. So these things are now really beginning to come together now that they've been in the marketplace for a while behind the scenes. The advantage of bringing them all together, of course, Adam alluded to, is one UI, one AI sitting on top, and one platform, one data underneath, sharing dimensions, sharing data where it's appropriate, but also keeping everything in its right place for the right audience and the right activity. So lots and lots of great work coming along. In our accounting world, we see some visions of increasing the value of the application by adding additional applications on top. So we're looking at things like lease accounting, IFRS 16. How do we get that nicely automated for everybody? Just extending out the consolidation duties that people have to do. And then obviously into things like strategic finance. Strategic finance to us will involve things like benchmarking. So we're having discussions now with third-party vendors of, hey, this is my results. How do I benchmark against other business automatically from a nice independent data source? And then obviously you go from benchmarking into any kind of external data being used for predictive analytics like demographics, geography, weather, whatever it might be. So we're working on that. As we integrate everything together from a planning perspective, a lot of those things start to tie nicely. Of course, if I'm planning something, I want to benchmark that as a comparison, not just my actuals. Here we're beginning to verticalize, as I mentioned. So yes, I have capital planning sitting in my IFP application, but it's pretty straightforward. It's kind of basic, solves 60–70% of the use cases. What happens if I want to buy a building and it's really, really complicated and it takes a long time and it's got lots of nuances in it? So capital expenditures by industry, where it's most appropriate, we will start verticalizing there. And that's another place where we'd love some help from our customer base on how best to do that. Allocations and profitability, everybody does that. We have a really, really nice application that focuses on allocation for financial services, if you haven't seen it. So things like asset profitability, etc. We're now taking that generic functionality, taking that functionality, very purpose-built use case, and actually genericizing it, so around the other way, for any kind of allocation activity, cost to cost, cost to profit, etc. So you should be seeing that application released fairly soon. We are working on that one. It's kind of one of our secret ones that we're going to bring to market hopefully this year. So allocation. So think of it, multi-tier allocations. Everything's got to go back to zero. Full profitability statements for 25,000 products or 1 million contracts or whatever you decide is the right level of detail. So we're excited about that one coming. As we go out into the future, we talked about subscriptions. We talked about things like project planning, and you can start to imagine if I'm planning for projects out of workforce. So I sell a contract, if I'm a software company, I need a lead project guy, project manager, I need 6 implementers, I need a QA person, whatever it might be. Okay, do I have the skills in-house to staff that? Do I need to subcontract that out? Do I need to bring somebody in, hire the requisition? That's our project planning, both from a headcount perspective and workforce, but also feeding into what's the profitability of that particular project. Is it worth making the effort? So again, these things start to glue together. And our beautiful lady on the right-hand side, what she's doing obviously is continuing to add applications that are her own, that you own, you build, and we will never get to because they're so unique and special that you still need to do that, or they're just natural extensions of the core applications themselves, and all the way out into the rest of our application suite, so into GTM. So you can imagine if you've done territory quota, you better damn well make sure you've got the right sales reps with the right skills in the right locations to execute against that. And of course, if you're in supply chain, yes, let's make sure the products that we're selling are profitable, etc. So again, bringing this connected planning vision together. So we're excited about that. A complete vision, hopefully satisfying every area that's a financial consolidation or planning customer. So what do you get in IFP? What does it look like? I mentioned we have a couple of sessions later. We have a demo. I will advertise this later as well, probably. And we also have a hands-on session. Tony came up to me and says, stop mentioning that because I'm really nervous, but please attend that one if you have time to get hands-on and actually start configuring within the application and get a flavor of it. We might as well drive Tony crazy. But what do you get? So I talked about the full financial set of statements. So yes, you get your income statement, cash flow, balance sheet all ready to go with appropriate drivers and metrics to plan out things like AR, AP, inventory turnover, etc. You get a standard set of forecasting methodologies. I mentioned we are kind of volume times price based, hence the need to do subscriptions and contracts and other revenue forms. But right now, that's the way that we plan revenue, which may or may not be appropriate to you. Basic headcount budgeting, so simply by head budgeting that pretty much everybody does. And of course, capital expenditure down to the asset type level. It's ready to go with scenarios. So of course, if I have my basic budget, the latest version, expanding that out across scenarios and applying my different drivers, however I wish to do so, different levels of detail, methodology, etc. That's all built in, ready to go. So just extending it out, very straightforward forecast planning. And we've also found as we've been implementing with our customers, of course, what they're doing once they import their own structures is they start changing it. They start tweaking, oh, I'd like this bit different. I'd like this a little bit different. So even though there's a core set of activities available within the application, some customers have 15 dimensions, some have 27, some have 28. It's entirely configurable, and the configuration device that we use to use that is customizable by each of our customers. It saves you a hell of a lot of time. You guys all know how long it can take to implement something. So in the box that you get, there's about 200 lists, there's about 400 modules, there's about 150 very, very pretty UX pages all ready to go, and about 150 processes to glue everything behind the scenes. It's approximately about 18 months worth of effort has gone into the current version that we see today. So if you were to build it yourself, it would take you 18 months. That would be the theory. So we've done all that for you. So huge time saving, and you can see the scope of the forecasting versions that we support within the application. And it's only going to get better. So it's totally upgradable. So if you acquire it today, We release a new release. The next new release will absorb the new AI console that Adam talked about, plus a couple of other feature functions that we're adding. That comes out hopefully in June, July. You would simply upgrade and use the latest, greatest one. So a true application in its form that always can be maintained, always can be updated. Who has been using this application? So some of our early adopters, if you like. So we'll pick on one, Sizewell. Sizewell's a bit depressing, actually. As an English person, I'm English-American, really, but as an English person, how the hell did we pay the French to build the first nuclear plant in England? It just goes against my complete nature to do that. But apparently we're building a nuclear plant, 50 years. That just shows how advanced the English is. It's not just our teeth, it's our energy as well that we're not very good at. So a $30 billion investment. Obviously, Sizewell, EDF came to us and said, right, we need to manage this very complicated long-term project. And you can imagine the reporting requirements because it's essentially a joint venture between private industry and the wonderful government that must have everything in every single form, every I dotted, every T crossed, etc. So lots and lots of different reporting requirements across different dimensions. So they actually acquired, they were the third customer, I think, and they acquired towards the end of December, and they were live pretty much by the end of March. So very, very rapid implementation. Now that is operating expenses only. They're all spending our money, well, not mine, I don't pay taxes there anymore, but they're spending our money in the UK quite happily. They're not making any money yet, but they will do hopefully eventually, unless there's some sort of horrific nuclear accident, I guess. I don't know why I said that, but whatever. And they're moving along. So they're moving along really nicely and obviously saved on staff, saved on time, and all of the reporting requirements from one data source to all their different stakeholders and all their different parties beautifully met. So very, very nice application. The other benefit of it is, if you're considering it is obviously there. So you can demonstrate it, you can touch it, you can feel it before you make any decision and do your gap analysis of whether it's appropriate or not. So we're very excited about that. We like that one. We like IFP and more to come. On the consolidation side of the house, so we acquired a company called Fluence about a year ago. I'll mention a couple of things on this particular slide. So Fluence is essentially a third generation consolidation product. So if you're as old as me, 100 years ago, you would basically bring to market two consolidation products, and any old person might know them, Frango and Cartesis. They were the first, they were European, and they were the first true consolidation products. So they're way off to the left, they're 1.0. Out of them became Hyperion. So Adam mentioned he was at Hyperion when HFM was first created. And so we have a lot of credibility with Adam's leadership. He also worked with me reselling Cartesis for a while, which was fun. Then we have the next generation. So the first generation is, it's pretty good, kind of works, but let's kind of make it more web-based, obviously around the year 2000. Let's make it a little easier to use. And those are where the product started maturing, or the next generation arrived, something like an Outlook Soft. I don't know if anybody in the house ever used Outlook Soft. That is now the SAP BPC product. The reason we show you the pictures, obviously we have Adam there from his Hyperion SAP days. We have a gentleman third and fourth to the right are both SAP BPC development leaders. They now work with us. The chap second from the left, his name is Hervé Capot. He is the inventor of Frango, he is the inventor of Outlook Soft, and he's the inventor of Fluence. So Hervé's with us leading development of the Anaplan Consolidations product today. Sits in his place in France, doing lots of great work for us. So it is the only application in the consolidation area that's been introduced since approximately about 2010. So it's the only innovation. So when we went out to the big wide world and said, how the hell are we going to support this Office for CFO vision? We could build it ourselves. We have the expertise in-house. And of course, we were aware of the Fluence company and the great work that it was doing. And we made the investment, obviously accelerated time to market. And since about approximately May, June last year, we've been integrating it into the Anaplan family. So it's a great legacy story. It's an extremely well-run product. Have about 200 customers live, and pretty much, again, once every couple of days, we close another one, which is super exciting for us. So that's the legacy history. What does it do? It does all of the consolidation stuff you would expect it to do. What it also brought along was the Anaplan for Office, Anaplan Excel reporting because that was the metaphor that Fluence used to deliver to end users. So we really got a 2-for-1 win there, because now that is our standard reporting for the future. So we're very excited about that. Now, who would be crazy enough to buy a product like that? So early, so innovative, out there in the marketplace? Well, apparently my friend Ross would. And so what we want to do is spend a little more time than we had earlier, just to go through consolidations from a true user perspective, a little bit more detail, and bring it to life for you. And then obviously we can answer questions. So Ross, if you would spend a little more time with me on stage. We're making Ross work pretty hard, making him do 2 presentations, getting our full money's worth. So thank you. We're going to take a seat, because it would be weird just standing up all the time. And Ross, the idea here, of course, is let's get into a bit more detail about LCS and how long you've been there and where did you come from and that sort of thing.
Sure. Happy to share. So as I mentioned earlier this morning, LCS is in the senior living industry. We are the 3rd largest. And really the bread and butter of it is we operate senior living communities. So whether you're the Roman Catholic Church or Goldman Sachs or the Sovereign Wealth Fund of Saudi Arabia, if you want to get into senior living in the United States, you want the experience and innovation of a leader. And so you would look to have somebody who specializes in that operate your property. And so that's how we got our start. We built a really solid reputation as an operator. People would hire us. We would bring in our expertise in compliance, HR, finance, all the technologies, and of course, operate in the community. Over the years, we developed more fee-for-service product lines, which are kind of highlighted on this slide. And they're all very diverse in kind of the revenue streams and how they generate revenue, what their products are. But things got more complicated about 10, 15 years ago. We recognized that like a Goldman Sachs would come in and invest in a property, and we would be very successful at filling it up for them and making it a successful community. And so once it was fully occupied, then they would want to sell and realize, monetize their investment. And so generally what would happen then is the buyer would bring in their own operator. And so we had done all this work over the last 3 or 4 years and found all this success and found this love for this community. And now some other operators coming in. And so we began deploying our own capital into the real estate market in these senior living properties. And so over time, we've come down to, we have 150 communities under management, but we have various equity stakes in about 50 to 60 of them. And so that gave a lot of complexity to our consolidation, equity method, non-controlling interests, consolidation. And then we also have all the fee-for-service business lines and the complexities that can bring. I am very proud to say that I worked there for 10 years. I've seen a lot of growth during that time. And we've been very successful in terms of helping our residents achieve the greatest levels of kind of engagement and dignity that they can have in their senior years. In the last 6 years, we have been awarded that J.D. Powers Award for the best senior living option in the U.S. So very proud to be part of the operation out there.
Like I said, I'm still looking for the insider deal later.
I don't get one either, Neil.
Oh, good man. All right. How big? So you look after planning and consolidations, just consolidation?
Well, as a controller, my focus is primarily on the consolidation of our actual results, working with the audit team, supporting the tax team, making sure we're getting the bills and the people paid. But as the controller, I also do get involved with our planning process, particularly on the corporate side, and a little bit on the site levels as well, in terms of looking ahead for our short-term and long-term projections.
And how big is your team?
Sure. We have on my team in corporate accounting about 20, 25 accountants. But if you look at us just in our headquarters in Des Moines, Iowa, we have a finance crew of about 85. And the reason for that is we operate all these centers of excellence. So if you want to hire us to operate your community, well, you can also have us do your accounting. We'll do your payables. We'll do your payroll. We'll do your billing. And so we have kind of this shared service model that we operate in Des Moines. And so because of that, we do have a fairly large team there. And then we probably have about 50 kind of director level folks out in the field who kind of run the accounting operations on site for some of the larger communities.
All right. And you mentioned from a consolidation perspective, minority interest, essentially, do you do joint ventures or anything else weird and wonderful?
Yeah. So, for instance, if we're entering into a deal with a new investor, we want to invest, as I said earlier, and they want us to invest so that we have skin in the game. And so, our partnership may range from us being involved at 2% all the way to us buying the entire thing at 100%. And so, because of that, depending on the joint venture, depending on the site, I need to treat each entity using different accounting methods, depending on our variable interests and ownership.
And they change during the life of the property as well, right? To
Yeah.
get even more fun.
Yeah. So, you may have one investor that wants to exit, and of course, we would definitely want to keep the management agreement, but we would love to keep it in our real estate portfolio too. So we'll look to find investors who might be interested in partnering with us. We may make bids of our own to buy it, and so what happens is you're constantly turning over these entities, and sometimes it's asset sales, and so you've got like a lot of open balance sheet work. Other times it's just changing the unit holders and reconfiguring how we consolidate it in our consolidation.
That's right. And as we learned earlier, you joined because you were a Hyperion financial manager expert, right? So tell us a little about what you inherited,
Yeah.
and again, just go through a little bit of the reason to change.
So 10 years ago, as I mentioned, we were looking to move more from the fee for service business line, which is really all about billing our clients, to getting into real estate investments and joint ventures and some of these complicated accounting things. And so my predecessor had a process that involved downloading the trial balances from all of our various ERPs into flat tables, and then bringing them in Microsoft Access, running a number of queries in Access, and then spitting that out into various Excel workbooks where he would do top side entries, and they would roll up as these files were all linked. It was really complicated when I came on and he was showing me how it works. I had a background in financial consolidations and systems, and it was difficult for me to get my mind around how he was accomplishing all this in Excel and Access. But that's what they were doing. He recognized that that was not going to be sustainable with the growth plans that the company had. And so he made the choice 10 years ago to invest in Hyperion. Unfortunately, the implementation stalled. The team wasn't able to get it off the ground. And so he began to look for somebody who could really focus on the project. At the time, I was the Hyperion planning and HFM administrator for Hyatt Hotels in Chicago. And they had just gone through a very similar journey. You know, they were managing hotels for other investors, and they wanted to start building up their real estate portfolio. And so they were getting involved in a number of different investments and things like that. And so I had been working a lot on their Hyperion solution. I also wanted to move to Des Moines, Iowa, which there are reasons why somebody would want to do that. And so it was a great arrangement for me to kind of join up with them. And so we were able to get them up and running in Hyperion by the end of, that would have been 2015. In terms of just rolling up the financials. But I was still having my team book like equity method income in the general ledger. They were using Excel to calculate it. They were doing allocations using Excel and, again, manual journal entries. The cash flow statement I was preparing manually. And so over the next 2 years, I used kind of my knowledge of Visual Basic and stuff to continually increase this calculation script to the point where by 2017, I was pretty happy with what we had built. The problem was nobody understood any of it. People weren't very comfortable with the Smart View reporting. The scripts were very black box to everybody else on my team. They didn't understand why this result was coming out of the system or how to trace through how it was calculating. If anything, if metadata needed to be edited, there's only 1 or 2 people on my team that were comfortable making those changes. And so it was just a very intensive technology for me to maintain. I felt I had a high level of job security, but I also felt I had a low level of mobility because nobody else in the company could manage the solution.
Yep. Okay, so then it comes up to today. So we've got product challenges, usability challenges. You mentioned the data center and moving away from on-premise,
Sure.
cost benefit. So all good reasons. I wanted to ask you on this one. So modernization to you, we hear a lot about finance transformation, modernization. What did that really mean for you as a vision outcome?
Sure. So the first thing I should say is our exit from Hyperion, it wasn't, I wish it was a proactive strategic decision. It was more reactive. As you mentioned, the CIO had told me that our data center was going to get shuttered, and if you want to keep running these on-prem solutions, you need to find somebody else to host them. And as we looked at that and we looked at some of the problems that we were having with Hyperion, there just wasn't a lot of energy or enthusiasm to start a project like migrating the tool to a different data center. So we knew we wanted to do the cloud. And as we looked at the kind of market space for consolidation, there were a couple of key candidates that we had identified. We're an Oracle shop, so of course we talked to Oracle about how they would approach our consolidation, and they were able to demo kind of their cloud solution. And OneStream was another major option. There was our sales rep with OneStream pursued the account for 2 or 3 years of trying to get us excited about OneStream. But at the end of the day, when I was kind of looking to my senior leaders about what this project would entail, I wasn't able to show or imagine that I would come out with much more than I already had in Hyperion. And unfortunately, these Oracle OneStream solutions had major implementation hurdles to clear. I mentioned this morning that for OneStream in particular, it was like $1 million price tag to get us set up with one of their third-party partners. And so that was a major consideration. Plus, it was going to be a significant amount of time, which I just didn't have with the data center being shuttered. And so that was a major challenge that we were working through, and I needed to find a solution. We were at the time, you kind of alluded to this earlier, very happy on the planning side. And so we called our planning provider, which happens to be Workday Adaptive, and kind of told them what we were looking at and what we wanted to do. And they had their own consolidation. Actually, I think they had 2 different platforms under their umbrella. But as they looked at our requirements, they recognized that they wouldn't be able to meet our needs with either one of them. But what they were able to do is introduce us to what was a very new solution, Fluence. And they were able to demo their product and show us what they could do. And the rapid deployment that they felt they could do in our use case was very attractive to me. And so we commenced on that project during the spring of 2023.
2023. So modern technology, speedy deployment, and ease of use, finance owned. Those are the basically.
Yeah, and that third one has been the biggest big ticket item for me. This ability of people to get into Anaplan Excel and answer their own variance questions or build their own reports. Again, the SmartView side, that was a great Excel add-on. I was into it, but nobody else would adopt it. Whereas with Anaplan Excel, you can either use this design wizard, and it kind of takes you step through step of building out a report, or you can kind of do this freeform style of reporting that I was more used to in SmartView. Oh, I'm sorry, guys. And it just works well, for every level of use. And so that's made my life a lot easier, being able to have others build reports and answer ad hoc questions. And then on the platform side, I'm here today, but I was also here yesterday. And yesterday was our biggest day for April close. And so it's the first time I've ever been able to step away from my team during month end, particularly on that day, because managing the metadata, managing the consolidation, and all the workflows that going into roll up our data no longer requires me to be part of the process, which again, job security down, but mobility up.
Hopefully that's a good.
Yeah, no, it is.
And you did learn a new thing yesterday on Anaplan Excel, right?
I did.
Yeah.
I did.
Hands-on training, and
which I should point out. So I learned something new, and it's not that the functionality that was available wasn't shown to me when we acquired the tool a couple years ago. There's continual investment into the tool, and I get these emails every month or every quarter with, this is what's coming with this update. And I'm embarrassed to tell you guys, I don't always read the email. And so, I went into this demo and they were demoing some functionality that I didn't realize had been brought into the tool over the last several months that we would really value at LCS. So I need to read those emails. So I know what I've got.
It was worth coming just for that aha moment.
Yeah, it was.
Yeah, wonderful. So today we are fully implemented. Anything left consolidation-wise to do, or?
No, and that was the challenge of this project. HFM had taken 2 years to build out, which was fine because we were starting from Access and Excel, so we could do that. But I wasn't going to go from Hyperion, which was doing what I wanted it to do, backwards. So in my mind, I was thinking I got to do 2 years of work to get into this new environment. But we were running live. I mentioned we started in April of 2023. We were live for June close in July of 2023. By the end of 2023, we had stopped loading to Hyperion. The data center was dark. I got through that year-end audit easier than anyone I had been through before, even though I had adopted a new tool during the course of the year. So we are fully live. We were fully live at the end of 2023 as far as I'm concerned. I think there are some opportunities as we look forward, but I'm not sure if you're there yet.
As in me or you?
Well, do you want me to talk about?
Yeah. What's on the roadmap for
As you talk about the finance kind of stack that's available to us here, this disclosure management concept. With all these joint ventures that we have, we are always the managing member, meaning we always have to do the tax returns. We always have to do the audit reports. So I've got to do 50 to 60 audit reports during the first quarter of every year. And, I'm reviewing these things and they're all basically the same thing, but I've got this big team of people that has to work super hard January through March, writing up all these footnotes and stuff for each individual joint venture, pulling these numbers from the right places, and they don't always do it right. And that stuff could be standardized. I mean, all this footnote is always going to point at these numbers in our standard chart of accounts in our consolidation system. I should be able to select from a drop-down what entity I want to do an audit report for and get kind of a standard audit report. And then I can just add some specific footnotes for like maybe the unique debt structure or things like that that maybe don't apply across the board. And I think that could really help us, because staffing for Q1 and then trying to figure out what to do with these people the rest of the year has been a real challenge. So I think that's an opportunity. Further integrations with our planning tool could help us in terms of integrating with our planning, could be
right?
A shortcut too.
Yep. Certainly, and the planning for Office, the Word stuff will help you for sure for narrative reporting. All right. So it was so good. This is the fun story.
Sure.
It was so good and such a pleasurable experience. What happened when you told the boss and reported up and shared the news?
So I mentioned that this whole journey started for us in 2022 when I found out the data center is going dark. But what I didn't mention is the year prior to that, our company that was about 50 years old at the time got acquired by basically private equity, Redwood Capital Management. And initially, they were pretty hands off and just kind of, we won't let you guys do your thing. So kept running our consolidation the way we were in Hyperion. And then we did the project that we just described with Anaplan consolidation. But Redwood's growing too. They're getting in more and more subsidiaries of greater and greater complexity and size with differing ERPs and all that. And they were dependent on an Excel consolidation of all these subsidiaries they had invested in. And so their CFO, who sits on our audit committee, was so impressed with how our project went implementing Anaplan consolidation that they pursued it, and they've now implemented Anaplan consolidation as their consolidation tool. It's awesome for me, because now the way that this is all built through pipelines and stuff, I hit play, all of my data that's consolidated in my financials comes out, it gets mapped into their chart of accounts and pushed into their system. I can open Anaplan Excel and a report that shows what's in my system next to what's in their system, and make sure that we tie out at all kind of the key metrics. And it's made reporting to them super simple, and they have a super high level of detail available to them too, should they want to, while also having a high level of detail all in their own chart of accounts. They were so happy with that now they've started suggesting that other subsidiaries go to it. So this Johnstone is an example. I don't know as much about them, but I do know that they're using the tool.
That's right. That's right. So thank you very much for spreading the word. So thank you very much for your time, Ross. Super job. Thank you so much for spending time with us. Thank you.